Afternoon, guys. So the presentation says Ali Hussein, so I'm not Ali Hussein. Ali Hussein is my chairman at the Fintech Association. So what happened is this morning at 5 a.m., Ali called me. He was not feeling well. As you well know, there's a cold bug that is going around, which put him down last night. So he called me at 5 and told me, hey, you need to step in. So this is Ali's presentation. And I'm not using Landry's line, but at least I'm doing better than him. You don't get to do a presentation done by your chairman. So I will do Ali's presentation, but I'll also speak to it. So today you have the chance to get 2 presentations for the price of 1. So let's do this. We'll start with, okay, tech issues. Sorry, can you try to sort me out here? So the import of this presentation is actually just to create the nexus between what we're doing in Kenya as a Fintech Association of Kenya and the Africa Fintech Network. So back in 2018, Ali and I were attending a conference in Kampala, Uganda, and which was being hosted by, they call it FITSPAC, Fintech Technology Service Providers of Uganda, FITSPAC, yeah. And Segu Naina, who is the president of the Africa Fintech Network, gave us a challenge and said, hey, you guys, Kenya is like, tech central. You're the guys who are doing amazing stuff, but here you are, not part of AFN, not hosting Africa in a summit like this. And he challenged us to go back home and try and figure out how we can be able to bring the fintech community together. And we started doing that early last year with a group of fintech leaders in the market. And we set up the Association of Fintechs in Kenya, which gladly to report that 1 year later, thanks to government bureaucracy, 1 year later, got registered by the government, and then it's therefore then a legal entity in Kenya today with more than 77 fintech companies as members. And we signed an MOU with the Africa Fintech Network. So we are part of the Africa Fintech Network as it is today. And what we're trying to do is we're trying to see how can we be able to collaborate across the continent, leverage on the knowledge that is being shared, the products that are being built, and also how do we better interact with the regulators, with government, with the corporate bodies, and we'll see some of the members that are part of the Africa Fintech Network. So on the fintech landscape, I will not dwell too much on that because most of you have read many presentations, you've looked at data, you've looked at a lot of white papers that have been written by various organizations. So I will not spend so much time on the landscape. I will only speak to some of the slides that he put in there and just put in my own words around that. So we start with the notable fintechs. You all know them. Some are Kenyan. Most of them are Nigerian. Yeah, somebody said Kenyans are polite. I'll give you a very short story for like 45 seconds. So as the Association of Fintechs in Kenya, we were invited to London in April, and we had this morning breakfast event. So we were 6 guys from Kenya. And when we walked into that room, so let's say the room had 100 guys. So when we walked into that room, 6 were Kenyan, 3 were British, the rest were Nigerian. And that's not even the point. The point is they had 2 cabinet ministers in that room, coming to listen to what the African fintech community is doing and trying to see how their government can support that. So there's the aspect of us, you and I, what are we doing about it? But also there's the aspect of our government actually getting interested in the conversations that are going on. And this is us flying all the way to London and finding them there, having taken over, and their government interested in those conversations. So it's just a challenge to us. So what Kevin said, it's something that we need to think through. I spoke about how much money, fintechs are raising in Africa, and the numbers look good. But the numbers are better when they tell you a story. So you get $4.9 billion coming into Africa, and that's a good story. But we're not hearing the other side of the story, which is what I spoke about, the challenge that the central bank governor gave us, is what is the story after this? So for me, this looks good. But when that money comes in, what do we do with it? What impact are we creating in Africa, in Kenya, in the various industries? We look at industries like agriculture, $32 billion a year, 32%, sorry, of the GDP in Kenya. 94% of agri transactions are still run in cash. So what is the fintech community doing around that space? Today, we import $2 billion worth of what we call, basic food, maize, wheat, rice, into Kenya. That is capital outflows into Kenya, $2 billion. The government spends $2 billion yearly importing this food, and it's food that we can grow here. It speaks to the broken agricultural value chain that fintech community can be able to solve for. The things that people like Nthigah are trying to fix. So for me, this slide gives me more questions than a pretty story. It actually asked me, after we get $5 billion, what are we doing with it? In which industries can we point and say this was transformational because of the investment that we got in the country? So for me, more questions than answers. The Unicorn Club, we all know them. I'm an ex-Cellulanter by blood, by heart. I will hope one day I'll see Cellulant in this list. That was a dream that we started many years ago, and I believe they're still on the path to achieving that. But more importantly, I can at least attest that we did have real case studies of things that we did in markets that impacted communities and the lives of people directly, and we could actually account for it. Cool. So as we move, we've heard about PAPs, and in the CEO breakfast in the morning, we sort of touched into it, is how are we able to easily move money around? We've got challenges. One of the biggest challenges we have in the African payment space is the fragmentation in terms of regulation, fragmentation in terms of movement of money. When I was at Cellulant, one of the biggest challenges that we had is when you give a company Africa-wide solution, especially for payments, collections, one of the biggest challenges is one, Forex, and number two, actually repatriation. There are countries that probably I won't mention now where you can actually not get your money out of there. So you can imagine for a startup that is actually trying to provide a solution for a company like KQ that is in more than 20 countries in Africa, how do you get your money back to continue financing your operations? It's some of the challenges that we're seeing. And for me, when I look at things like PAPs, it's a good opportunity for us and asking ourselves, even at individual level, even as banks that are operating here locally, how can you plug into platforms like this to help your SMEs, your individual customers able to power transactions across the continent in real time? Landry in the morning, when he was given the challenge of what's happening to banks now that the fintechs look like they're taking over, he rebutted by saying, they're not allowing their legacy technology to hold them back in terms of competing in the fintech space. And this is true because we're seeing a lot of banks now either buying into fintechs, investing into fintechs, or actually even starting their own fintech arms. We've got perfect examples in Kenya, FinServe, Vuma. I know Stanbic is putting up something. Cooperative Bank, and I'm seeing Charles there, who was one of the guys who started Hive at Copbank. Amazing stuff. So the banking industry not being left behind, getting in there, snuggling it out with the fintech industry, at some point partnering well, and a lot of them happening across Africa. Telcos as well, again, not being left behind, creating the payment rails. I would say that this has really supported, especially the remittance business in Africa. From way back, Ding, Sendwave, all these guys who are actually using the mobile money rails to power remittances into Africa. But again, when I look at these numbers, they also give me another story and more questions. So I see MTN has got 50 million customers across Africa, mobile money customers, and M-Pesa has what, 58. So what's the population of Africa? Roughly 1 billion, 1.2 billion. So we are playing at around 10% of the African population. But if you double click on these numbers, what they don't tell you is that not all the 50 million are active customers month on month. So you'll find that probably only 20% of these guys are actually active customers month on month. So we are dealing probably with, what? 10 million to 20 million active customers across Africa on mobile money. Yet we are saying we are leading the conversation on digital financial services. It then tells you that we are barely scratching the surface. So for me, when I look at these numbers, they're good. And I'm not saying the numbers are not good, they're good. But at times we need to double click on those numbers and ask ourselves more questions. Are we actually really heading there? Have we even started? And for me, when I look at this, we still haven't started. If we are to transform the lives of many Africans through mobile financial services. These numbers have to go 3 times, 4 times, and it's the people in this room that need to make that happen. CBDCs as well. I look at it as a good thing and also as a cheeky thing in a sense. It's a good thing because the central banks are coming around in digital currencies, but also it's a cheeky thing because I think there's an element of control as well. Not wanting to be left out of the conversation, so you say, let me create my own thing that we can control. But all the same, the question is, how can we leverage on the conversation that is already started by the CBDCs? I know the Central Bank of Kenya issued a white paper on CBDCs, shared it out, called out for comments. I don't know how many of us read it. I don't know how many of us gave their submissions. Again, like I mentioned before, are we participating actively in these conversations? So that when they create a framework for CBDCs and then we rise up and say this thing doesn't work for the fintech community. But when they issued the white paper, nobody commented on it. So just a call on us to be active citizens in that aspect. So very quickly on the challenges that we are facing. I know funding, when you look at the numbers, you might say that funding is not a challenge per se. But think about it this way. For those of you who have started startups, I hope that makes sense. Started startups or started businesses. I have. When I resigned from Cellulant, I started my own startup. Long story. There's always this phrase, friends, family, and fools. So if you don't have your own cash reserves, you go out to your friends, you go out to family, and a couple of fools who don't understand what you're doing, but they like you. So they give you some little money to do whatever it is that you want to do. So that has always been the story of the African startup. But when I look at news, when I do, once in probably 6 months, I always see guys advertising plots, I don't know, all those things, and the guys investing in plots and buying. But I'm wondering, it means actually guys have the money, but nobody is willing to invest money in technology. I don't quite get it, because everyone here, like Landry was saying, has a side hustle. But you'd rather buy a plot in Kitengela than give Munyi 100,000 shillings to actually pay for servers to actually host my code. I mean, I don't understand it. And this is the point that we're speaking to here. How can we be able to get local investors interested in technology? Because remember, at the end of the day, when the DFI comes in, the profits will go out. It's the reality. So what if it means a company like Cellulant that I was part of, if it got that $50 million from you guys here, the multiplier effect, either on your investment or the impact they're having in the society today, will be distributed among the people in this room. That's simply what we are talking about. And that's the challenge that we are speaking to here. Growing and retaining talent, we all know. Talent wars and all those things. I mean, Microsoft's, Google, and now I hear Amazon is coming to town, and they're poaching, techies from startups and all the places. It's a challenge that is not going anywhere, because I remember sitting in Exco in Cellulant in 2016 was one of our discussion topics. We were losing talent, but that time we were losing talent to banks, interestingly. But we didn't mind losing to banks, because we were collaborating with banks. So we used to call it school fees. We are paying school fees for banks. Because when they go on the other side, they understand our language and then they integrate with us better. So we didn't mind that until Andela came to town. And you're like, what? I was paying this guy 80K, he's been offered 300K. How do you even have that conversation? So, I mean, it's a real challenge. It's not going anywhere. And I think it's about time that companies look at more innovative ways of retaining talent. I know there's always a salary war and all those things, but those of you who are techies, I believe, the value that you derive most in actually seeing these products that you built actually being put out there and actually changing lives. I want to believe that, because that's what I've learned over the many years that I've worked with techies. I'm not one. And I think most companies need to start looking at different ways of how they're able to retain this talent. Need for more understanding of the fintech ecosystem by policymakers. We spoke about it. I'll give you a very quick example. 2012, when you're launching mobile banking with a certain bank X in Kenya, the central bank did not have a policy around mobile banking. Right now, we're talking about cryptocurrency and all these things. Something as basic as mobile banking today, 2012, August, CBK did not have a framework for managing mobile banking. And what they told that bank is, go to Cellulant and let them give you their product document. And that is what they used to give the bank a letter of no objection. That's how far we've come. So, and speaks to what I was talking about is how can we be able to open up to the regulators to show them what we are doing. So you can imagine there was no policy around mobile banking, but they did not stop the bank from going live once they understood what it is that we are doing. So these conversations really matter. Cyber threats, we all know that. The Mulot guys committee, the central bank governor calls it the Committee Innovation Hub. Those guys that call you and, try to do some social engineering on you. Gaps in digital finance literacy by consumers. You can imagine the conversation about cryptocurrency today. Do your villagers know what crypto is? Yet everybody is saying crypto is the next big thing. So you can imagine the gap in terms of literacy. We don't assume that everybody understands what it is that we are talking about. And of course, inadequate infrastructure, internet. I work from home 100%. My dad is 87 years old. I'd love to spend a lot of time with my dad. The only reason why I can't do that is because my shags doesn't have good internet. Otherwise, I'd be spending 80% of my time there because I'm working from home anyway. And that's my home. So it's a challenge, even for somebody like me, being affected by challenges like these on infrastructure. So some of the things that we need to. So what's the role of Africa Fintech Network, very quickly as I summarize, is basically we trying to capacity building. Recently, Ali, our chairman, was trying to train central banks on risk-based lending, which is what most digital lenders are doing, and just trying to get central banks appreciate that. Trying to interface more with regulators, creating a fintech radar, having all this dream where we could have, when you're walking in town and you've got this, what you call window shopping and all these mannequins and whatever it is. So imagine all these mannequins inside those windows are fintech companies where people just come in and see the whole wide sector of the fintech and say, these are the people that we need to work with. And of course, advocacy with government. So quickly, again, a platform that unites Africa fintech leaders and organizations, and also made up of self-regulating fintech association like the Kenya, Africa, the Association of Fintechs in Kenya, FITSPAC in Uganda, and the rest. But also we've got corporate members of which EcoBank, which is a Pan-African bank, coming to join the Africa Fintech Network and participating as a corporate member. 34 countries already, some at different development stages. But more importantly is the fact that we would like to actually cover all countries in Africa, because this is the beginning of the African conversation. If we can have a space where all African countries through their FinTech Association are having a conversation on how they can overcome some of these challenges, it becomes a very powerful conversation in terms of how we're able to transform and overcome the challenges that we've spoken to. So I will not read all this. I will stop there in the interest of time. I will thank you all for listening to me, and have a productive and exciting 2 days here. Thank you.